Yes, yes, my fellow simpletons and degenerates. Once again, here I am, the Savage of Wall Street, coming once again live, making sure that people get, pretty much ready for tomorrow and what tomorrow is going to bring. It is Sunday, August 24th, and we are getting ready for August 25th. Uh, Jerome Powell may cut rates in September, given his softened stance as per his last meeting we had, where he spoke at Jackson Hole on Friday. So um, we also have some NVDA earnings on Wednesday, August the 27th, and so. How do we position ourselves to better take advantage of these opportunities, right? What do we do? However, I'm saying, sorry. How do we position ourselves to take advantage of what the market gives us, right? Are we going to go and try to guess what the market is going to give us? Or are we going to position ourselves somewhere where we are going to take the most money possible from overreactions to different earnings and to what the market is telling us right then and there, right? Are we going to be up 5-10% on Thursday because NVIDIA earnings crushed it once again? Or are we going to trade sideways? Are we going to trade lower, given all the metrics that up to this point we've gotten? And are we going to get some black swan event? We don't know, right? What do we know? Well, we know that right now, as of this second, futures are a little green, right? And rightfully so. I mean, we got some good news, I guess the market would say, on Friday from Jackson Hole and from Jerome Powell. He has finally softened his stance as far as rate cuts. It seems that we will have a rate cut on September, and everybody's excited, everybody's happy. This market just wants to keep going up. What do we do? We're holding all these stocks. Some of them are at 52-week lows, close to it. Some are at 52-week highs, close to it. How do we trade? What do we got? Who do we have here? Charlie C2 is in the house. Oh, he's still here. Charlie C2 was here earlier when I was talking about RXRX, GME earnings, and C3.Ai, and the upside that we have as far as the companies, and also why I'm trading them and why I'm so excited, especially now the rates are going to get cut, and my thesis as to why they're going to go up. Charlie C2 still here, dude. Thank you so much for watching. I appreciate you. I figured I'll go once again. I did say I was going to go in at 5 p.m. It is 5 p.m. California time. And so here I is, my friends. Charlie C2's in the house saying hello, hello. Ken's mom is back. Ken's mom is a regular. I would have to say she's probably my number one fan, and I appreciate that so much, and she knows that. She is a moneymaker. And she's ready. She's ready to make some money. She's ready to see what tomorrow's going to bring us. And I think she's pretty much here to let us know, that she's doing great. And she's probably going to make some smart trades and try to bring 105% on this trade, as well as the last trade that she brought her 105% return in. I mean, she's crushing this market, and we're excited. I'm excited. She's excited. Let's get excited together, man. Let's make money. The goal is to make 100 millionaires with this channel, on this channel, in the future to come, right? Will it take 5 years, 4 years, 3, 10? We don't know. I'm going to be around as much as I can, God willing. And hopefully, if you guys are around, you guys are able to tell me you guys have made your goal. And that's going to make me happy, man. Moneymaker One is in the house saying, what's up, Savage? Ken's mom saying he's back. I am. Moneymaker One is saying, flushing my water heater for maintenance, but let's get it. You know what? You could be flushing your water heater for maintenance, and that's okay. And if it so happens that you needed a new water heater, I can guarantee you that you can sell some cash secure puts, sell some covered calls, make some money, and pay for a brand new heater with those covered calls and cash secure puts. You know why? Because a couple of years ago, my big fridge took a crap, and I went straight to Kohl's, Lowe's. I went to Lowe's, and it was, I think, on Black Friday. It just so happens in that week is when the fridge started giving us problems, and we still took advantage of the Black Friday deals they had. And I think I got like a $4,799 French door big fridge. It's like one of those double doors, Whirlpool. I got it for like $2,400, and then it came with, like, I don't know, 10 years of warranty, and it was just something ridiculous, right? But free installation, free delivery, and they took the old fridge. I ended up buying, I think, some TVs also that weekend. I think, what else did I buy? I think we bought some shoes. I mean, we bought quite a bit, right? But a big old giant microwave that we absolutely did not need. But since we were there already, and my wife said, "Oh my God, that's a beautiful microwave." It was down from $700 to like $199, and she was like, "I need that." And I said, "Okay, happy wife, happy life. That's how we deal here." And so we got that microwave. I think we got some other appliances. It's a blur at this point. I think we got one of those shampoo machines, those carpet. When you shampoo your carpet, they look like a vacuum cleaner. Vacuum cleaner. We got a vacuum cleaner. So, anyways, gamblers paid for that. So if that happened with us, I know that it can happen with you. And you say, "Thank you, gamblers. Thank you for the money. Thank you for, the hopes and dreams that you're buying. And I have the stock. I have the collateral that is what you guys want, and I'm willing to take that bet. Let's do it. 90% chance that you're going to win. Great odds. Take it. Be the casino. We are the casino. We are not the gamblers." Charlie C2 is saying, "I got some RXRX $5 puts out to January 2027 for 178 average, going for 190 as of Friday close. Might sell a couple more and bring up my average." Or you could look at BBAI. I mean, look at the $7 cash secure puts. This is not financial advice, by the way. This is just me telling you to look for information. Okay, look at this January 2027 BBAI $7 puts that are bringing 360, 370 right now. So that is more than 50%. 50%. And I assure you, BBAI is not going to stay down here longer, especially if we're cutting rates. They're going to take a ridiculous amount of loans. They're going to put so much money into their coffers. They're going to use this for R&D. They're going to sign some new contracts that are going to renew. They're going to make a killing. They're going to $10 a share. Telling you right now. So that's money in the bank. It's easy money. They're giving it away at this point. Why not take it? They are literally begging you to take this money. And so you say, "You know what? I am such a kind person. I will do that. I will take that money from you so that I can pay my mortgage, pay my rent, so that I can pay for these appliances, so that I can make my life easier, so that I can make that of my family's life easier." And it just so happens that you're the one that's going to enjoy the upside of it, and there's nothing wrong with it, because if it's not you, it'll be someone else, and it might as well be you, my friend. So funny you say that, says Charlie C2. My wife mentioned I should do the same to the water heater yesterday. You guys are hilarious. You know why? Because we were talking about flushing the water heater ourselves. But it's super hot. And then our heater is actually in the garage. In the garage, it's been over 110 degrees, 115 degrees the last few days, because it's over 101 degrees here in where we are. And so I'm taking my time, right? But it's going to have to get done. Jude K is in the house saying, "Good evening, Savage." I know Jude K was here earlier, and here you are once again. And so Good afternoon, my friend. I hope you guys are doing great. Good evening if you happen to be in the East Coast. Wherever you are, I am happy that you're here watching me, thinking about what moves we're going to make tomorrow, right? I mean, the market is going to open. It's looking like it's green. I mean, futures is green, Nasdaq's green, Dow's green. Dow's green. S&P looks green. I mean, there's nothing to say as far as, like me and my bearish outlook. I mean, I'm eating crow point, but it's not because the things that are supposed to be happening, and I said are happening, are not happening. It's just that Jerome Powell decided to bend the knee. He's going to give Trump his rate cut. Trump walked around the Fed building and said, we're wasting $2 billion on this. Oh, I think I'm going to have to audit some people. And then Jerome Powell said, maybe not. I'll give you your rate cut. Please don't do that. And so he's going to get his rate cut. We're just going to have to be the ones that take advantage of that upside. Why not? What else do we got here? Charlie C2 is saying, I got BBAI $6 puts out to January 2026, but the 7 ones out to January 27. Sound interesting for sure. It's actually more than 50%. I can guarantee you that. It's 350 would be 52%, right? I mean, 50%. Because 350 out of 7, right? It's 50%. But if you get 370, 375, you're talking about what, 55%? 53 to 55%. I mean, that is insane. That is an insane return in 2 years. Even if you were to just let them go till expiry, you have to do nothing. You take $7,000 and you automatically get like $3,700 back in your pocket. You have to do nothing else. If you were to let that money sleep for a year and a half, you already took a big chunk out of that. And you could literally go and buy a brand new sofa bed, refrigerator, icebox, whatever, and you could decorate your house with it, and people will be like, where you get that money from? And you'd be like, I took a loan against my stock. Or not even, you took a loan against your collateral, which is cash. That's insane, man. And those returns are yours. Like, it's your money right then and there. You can very well buy stock. You can buy stock and on the cheap. You could go buy some RXRX. You could buy for $3,700. You could buy what, like 500 shares, 700 shares of RXRX. You could buy, a couple of hundred shares of C3.Ai. You could buy 100 shares of RXRX, 100 C3.Ai. You could buy, I don't know, 200 of BBAI. You could buy 100 of Archer, or like, let's see what else. 100 or 200 of Lucid, 100 Ioba, 100 Prop. I mean, the possibilities are endless. Oh, by the way, do not poo-poo on Smart Rent. All right. I know there was a lot of people that were laughing at me mentioning Smart Rent. I think, I don't know, like 2 weeks ago. And I was like, guys, Smart Rent was down, I think, let's see here. It was like a 98 cents or something. And I was like, because there were, whispers of maybe a rate cut, maybe not. But I was like, people are always asking when the best time to get into the stock market is, right? And it's during a bearish market. That's the best time to get, when everyone else is running for their lives and leaving the market, is when you go in. There's blood in the streets and you take advantage of it. Also, when a stock that you want is at a 52-week low. When it's at a 52-week low, for whatever reasons, unless it's because the CEO is a scumbag and he did some insider trading of some sort, or someone else in there did some insider trading, unless they are, filing for Chapter 11, going on bankruptcy, unless they were caught on some scandal. If it's a hit piece from like Hindenburg Research or something like that, that is when I love it, because I go and I buy stock at 52-week lows and I gobble stock. And then I watch like the overreaction happen, and I literally say, that's an overreaction. Within a week, the stock is back, up 30% from where I got it, maybe 40, and then I just wait. And then I sell my covered calls, and then it recovers. And then I get taken out when the stock has recovered 150% from where I got it, and I get taken out and I make money. I mean, that's how you do it. That's exactly how you do it, Let's see what else we have here. Chart EC2 is saying roll the January 26 sixes to January 2027 sevens and add a couple of more to the pile. You could very well do that, my friend. You could do that, and that is not a bad move to make. All right. So Smart Rent, like I said, is sitting at $1.50 a share. It was like 138, I think, last Friday. It's now 150. Okay. It is up in the last 2 weeks, up 47%. Okay. In the last week, it's up 0.67%. Right. But the last trading day, it was up between the after hours and regular trading hours, 7%. So Friday, up 7% already. I am willing to bet that it's going to go up tomorrow. So don't be afraid to look at Smart Rent at this point. If you missed the train with Open Door, that's fine. There's always another Open Door, guys. There's always another Smart Rent. So if you are like, just kind of disappointed that you're like, damn, Savage, you were talking about Open Door like 6 months ago and telling people to buy when it was 50s, in the 50s, 60 cent, price range. And I missed that, man. Should I go back into Open Door? I mean, quite honestly, if we're going to cut rates, and I said this is a real estate play, right? And real estate is going to recover. Matter of fact, today, we went for a drive with the wife and we went shopping for some stuff. And we just happened to notice around this whole area where we went, there is a lot of signs for homes for sale now. More than we've seen in a long time. The only other time we saw homes for rent at this to this magnitude was 2021, I believe. 2020, 2021. And that's the last time we saw so many for rent signs up, or I'm sorry, for sale signs up. There's a lot of homes for sale here. And I'm willing to bet the fact that there's going to be rate cuts is probably one of those reasons, or a very big reason why people are going to start buying a lot more homes. Real estate plays just woke up from their slumber. That rotation in the market is happening. Do not miss it. Do not miss it. The market is all about rotating from one sector to the next. And right now, I think pharmaceuticals and real estate are going to be back. And so, Open Door, I think it's probably going to go to 10. I said it was going to go to 5. Like I said, you could 10x this stock when it was 50 cents, 50, 60 cents. And I was saying this is going to 10x. It'll go to $6, $5, $6 easily. Now, looking at the way things are going and the fact that people really know that this stock exists now, I think I see it going from $8 to $10. Have you missed the train yet? I don't think so. Is there going to be volatility? Absolutely. Now, do you want to play around in the Open Door market? And are you do you have the stomach to withstand it dropping 30% in a week? Do you have the stomach to see it going from $5 to $3? It may go to $2 and go down 50, 60%, but it's going to come back up. Now, if you have that type of stomach, I don't see why you shouldn't go in there. The way I would go in is with cash secured puts, right? Right now, a $4 cash secured put out to October. All right, it's at 520 at this point. It's trading at 520 Open Door is, right? A $4 cash secured put will bring you $1. Right now, it'll bring you 98 cents to $1. So you could very well put a stink bear in there and say, I'm willing to buy this stock on October 17th for $1. And so guess what? you're putting $4 in, you're bringing 25% of your original investment right away, 25%. And if you hold until October 17th and that stock is under $4, that's your stock. If it's over, they give you back your money. Easy peasy, you just made 25% of your investment in like 2 months. That's if you want to play in that market. You can absolutely do it. You just got to have the stomach to withstand the violent moves up and down. Now, is there a guarantee that it's going to go to $8-10? Absolutely not. But given the metrics, given the history, given what you're seeing right now, you can make a pretty good assumption that it's probably going to go up from where it is now. Now, where is it going to stop? Nobody knows, right? I mean, if I knew, I would not be here. I would be sitting next to Jerome Powell somewhere telling him, hey, man, this market has to move and this is the way it's going to go. So open doors. So you want to go to September with those fours, right? Okay, let's say you want to wait not that much. Well, you know what? Right now, $4 puts for our for open are 72 cents. That is actually a very crazy number. That's almost 20% that you're getting like in a month, in less than a month. It's the 24th, tomorrow's the 25th. That's crazy. That's a little over 3 weeks, and you're gonna get $72 for the $4 cash secure put. I may go and I put a stinker of like $1. If somebody gives me $1 for my $4 to go to September 19th for some cash secure puts, I already have $5 covered calls. So like I'm just gonna choke it between that $4 and $5 channel. Why not? Why the hell not? I mean, I like playing this playground. I like getting paid. I mean, I already believed in that stock because I averaged down like a mofo to the 70s and 80s when it was 50 cents. And so I'm taking advantage of it, and I'm definitely looking at those $4 cash secure puts out to September the 19th. Crazier things have happened. Okay, what do we got here? Tom Kaufman is saying, Savage, twice in one day. Cool, man. Yes, Tom, I am here again. I figured I'd go live once again because, this time we're going to talk about what's happening tomorrow. NVIDIA earnings on Wednesday. So remember, NVIDIA moves the market, my friends. NVIDIA moves the market. GME earnings are coming up as well. So, I have absolutely nothing but 5 covered calls written on GME. And if you think about the fact that it used to be $1.5 billion in the hole as a company not too long ago. And now if you flip that, if you take into account the fact that they hold like $9 billion in cash plus $1 billion in Bitcoin, I mean, GME is sitting on a lot of fucking cash. Pardon my French. But that's a lot of money they're sitting on. You think they're just going to stay there? I'm telling you, Cohen is looking. He's looking. What says that he doesn't go into, I don't know, Palantir and buy some Palantir? Why if he buys NVIDIA? What if he buys into Tesla? I mean, there's so many things that he can do, and how he can use that money. And because of the way that he has acted up to this point, and because he's, quite smart when it comes to investing, and because his future is pegged to the stock price, I think that it's in his best interest that the company goes to like $50 a share or more. And so I think we could take that into account and just be like, you know what? I have 1,000, 1,500, 2,000 shares of GME. And if we see it uptick to like $25, $30, do not be afraid to sell some covered calls, man. Do not be afraid to sell some covered calls. Even if you go to like January, if and when GME moves to $30, $29 a share, those $35 covered calls out to January may bring you $5, $6, $7 a share. Take that opportunity. Take the opportunity and dare the market to take you out. You know, you can do monthlies if you want. People like doing weeklies, you know, and I see the reasoning, because if you're to sell, you know, I don't know, a weekly that brings you in, I don't know, say 5%, right? Or 3%. And then the next week, supposedly you're going to get another 3%, 5%, and so on. Yeah, over time, if those market conditions were to stay the same, yes, you could make a lot of money if you sold weeklies, right? But the market conditions change drastically, especially now with these rate cuts. Market conditions are going to gyrate up and down wildly. And so take big chunks. Take big chunks. You're gonna get more money in your account, and you're protected to the upside and to the downside a lot more. You know, when C3.Ai went from $23 to like $14 in a day, everybody and their baby moms was panicking. They were saying, "Oh my God, you know, my puts that are expiring in a week, 2 weeks, in a month. Those are I'm going to get those shares put to me. Oh my God, what do I do?" And it's like, okay, well, you could have sold, you know, some $25 cash secure puts out to 2026 and brought in $6, so you were protected up to 19. The stock goes to 14 or $15. You know, you're only $4 off, right? You wait for time to happen and decay those cash secure puts, right? And then if you happen to still be in that range on that day up, then you can go out, you know, 6 months to a year, and instead of being down like, you know, $13, $12, you know, you're down like $4, $3, right? It's just a lot more bearing, a lot more palatable, right, to make that move. And also you give you give yourself time to adjust to market conditions. You're not just, you know, stressed out trying to think of the next move, you know, and then you have all these moves that you got to make, because if you are an options trader like myself, you don't have one or two covered calls out and cash your puts. You have like dozens out that expire next month. So the less amount of stress you have, the better. And so GME earnings, I think, are going to look good. I think that, you know, the market is going to do what the market does, which is poop on GME. But then, you know, we're going to get the failures to deliver again, and we are going to get some numbers from the CEO that say that, you know, we're holding now $2 billion worth of Bitcoin, and that we've moved to some real estate, and they're acquiring, you know, a big stake on some big real estate company like Open Door or Rocket. I don't know. It's just the possibilities are endless, right? But they can do that. I mean, there is no mistake that Cohen said that he feels that GME could be the next Berkshire Hathaway. You know why? And I know this is so silly to a lot of people. And I mean, it's some of it is in jest, right? But is it really? Is it really? I mean, what does Berkshire Hathaway do? They go and buy, you know, larger stakes of different companies that are beaten and devalued, right? Undervalued, and they hold and they wait, and the market goes up, the companies go up, the price of whatever it is that they own go up, the value of the company goes up, and then they take loans against that, or they sell big stakes, and they bring in a ridiculous amount of capital, and they just hoard all that cash. And then whenever there's a big downturn in the market, they take a ridiculous amount of money that they have and they go on frenzies. And then what happens? They wait for the recoveries happen, they sell for a ridiculous amount of profit, and they hold their cash again, and they go and they buy so more companies that are down in their luck and are that are undervalued, and rinse and repeat and make a ridiculous amount of money. And that stock is worth like $500 million a share right now. That is insane. Now, am I saying GME is going to be worth $1 billion a share or $500,000 a share? I'm not saying that at all. But I'm saying that if he's going to do if he's going to use Berkshire Hathaway as a model, that is not a bad model to follow. Okay, he's doing the same thing that the ROG investor, and I can't think of his name for the life. Why? For the life of me, I can't think of his name. Buffett, Warren Buffett. That's the same processes, thought the process, that he has. There's nothing wrong with that at all. And GME could very well be $50, $60 a share in a very short period of time. It's just a matter of when. So, and do you believe in this company? Do you believe in this company? That's another thing. They're flipping, and they're moving their business model now. Okay, and it seems like it's getting traction. It's a thing right now. People are actually, big into the GME digital age, right? And they can do whatever they want. They have $10 billion to play with. The sky's the limit. Where are they going to take their money? What are they going to do? Have they acquired any stake on some other companies that we know of? We don't know. But if they do, and if they did, this stock is going up. So, because I just wanted to say that I wrote on, GME, and because I just got tired of bag holding, I just sold some $5, some $23 covered calls. I sold 5 of them, and I brought in, like close to $1,000 for 5 covered calls. But that's like nothing. I have so many more shares that I can ride on, right? And I'm just waiting to see what this earnings is going to bring. And hey, what always happens with GME might just happen this time, that people start buying for whatever reasons. People start buying stock and gobbling up, and then there is no paper. Nobody's selling. Nobody is selling the stock. So what do? The spread goes from 5 cents a share to 32 cents a share, and then it jumps from $23 to $23.50. $23.55 to $23.73. And just it takes these big jumps. Next thing you know, the stock is $30. So I'm just, Kenny's in trouble, guys. Kenny is in trouble, and I am here for it. That's all I got to say about that. Mando number 5 is in the house saying, let's go. Indeed, let's go, my friend. We're talking shop. We're talking tomorrow and what the market is bringing. We are talking earnings. NVIDIA has got earnings on Wednesday, and we are very curious to see what NVIDIA's got to say. And NVIDIA is going to move the market, and I am here for it. CKT's in the house saying, let's make money tomorrow. Could you go over the credit card hack you discussed in the Discord? You're going to have to refresh my memory there, buddy. But if you're talking about the hack where Ricardo Canales is in the house. Savage, he says. What's up, Ricardo? How you doing? If it's a credit card hack that you take an American Express card, you take the sign-up bonus points from it, and you then transfer it to one of the transfer partners like ANA, which is the airlines, All Nippon Airways, and then you use those points to then buy a first-class ticket to go to Japan. That ticket is worth $19,000. So your 80,000 to 100,000 American Express points in reality are worth $19,000. So you can then use that to buy that ticket, and then you can go to Japan first class and have the time of your life. That's a 14-hour flight where you're going to be treated like royalty. I mean, the champagne they have there is... All Nippon Airways actually has a contract with this one specific French Champagne Winery, and it's the only contract they have. That Champagne Winery only has them to provide that champagne for, and it's exquisite. Um, and you can have sushi from one of the sushi chefs up top that they have in that cabin, the first class cabin. You're gonna have like anywhere from like 15 to 20 different meals. They're small meals, but they're insanely good meals. And so anyways, you could use your credit card points to travel to Tokyo via All Nippon Airways. That's I think what you were trying to talk about. CKT saying I mentioned taking a HELOC out to trade, and you said instead of taking money out against your house, you did it on a credit card. Okay, I remember now. Okay, so there's I have so anyways, I'm the credit savage of Wall Street for a fucking reason, right? And that's because I haven't paid for a hotel stay in over 5 years. I haven't paid for retail price to travel on an airlines for years, and that's because I try to generate all these points via credit cards, right? By using credit cards on the everyday spend, like groceries, gas, going to restaurants, and going to Costco, right? Something as mundane as going to the pharmacy and picking up some medication, right? I got a credit card that gives me 3 points for every dollar spent on medication at Walgreens, on any Walgreens, any purchase at Walgreens, because it rings as, Walgreens pharmacy, right? So whenever the kids have a cold, I go and I buy NyQuil, whatever, kids NyQuil, whatever, Band-Aids, you name it. I go to Walgreens, I spend whatever I spend, and then I'll put it on my Freedom Flex, my Chase Freedom Flex, and I get 3 points every dollar spent. Now, I have multiple different cards, and one of the credit cards that I have is the American Airlines credit card by Citi, and so, anyways, I always get offers on the mail because for that credit card, other credit cards as well. I think the Bank of America Alaska card is the same thing. But for some reason, it's always the airline cards that send you promos. And they say, hey, have you thought about a balance transfer, right? So basically what that is you have a credit limit. You can always upgrade that limit. I don't know if you guys know that, but you can, if you've been with a specific company or you have had a credit card for like 5 years and you've never missed a payment, and you're always using it, right? You say you have a $10,000, $12,000 limit. It could be 7,000, whatever. But you can call and you say, hey, I'd like you guys to increase my credit limit because I have a large purchase coming up and I'd like to put it on the card. They salivate at that because they know that you're probably going to end up paying a yearly rate, right? An annual rate, which is like 12%, 14%. Those cards are usually upwards in the double digits, right? They say, yeah, let's see what we can do. And then if you have a $7,000 limit, they may increase it $5,000, sometimes twice. Anyways, the point is that if you have a credit card that has got a limit of like $25,000, right? They send you mailers, and it doesn't have to be $20,000. I'm using this as just like a fucking number, but they send mailers and they say, have you thought about a balance transfer? And what that means is if you have any large purchases, you want to buy a car or something, they say you can take out a loan and use your credit against it. Basically, you're taking a loan out against your credit card, right? So it's called a balance transfer, and they'll tell you how much they're charging you. Some companies say we'll take 4% of the total amount of the loan. So if you take out a $10,000 loan, right, a balance transfer, you're basically making that check out to yourself, and then you're going to deposit it in your account, and then in a few days, 3 to 4 or 5 business days, then you're going to see that cash show up in your account, right? It's a loan, but it has a price, and you paid it up front. Now, see, this is the thing. Do not take out a loan just to take it out. Make sure that they're giving you a promo where the APR is 0% for 16 to 20 months, anywhere from 16 to 20 months, right? Some are 16, some are 18 months, some are 20 months. But the bottom line is that I like to take advantage of that because it's basically a loan that you're paying a fee up front. And if it's, let's say, it's say it's 4%, right? So that's $400 for $10,000. So you take out a loan against, your credit, and it's $10,000, then you could take those $10,000 and then you could then transfer them to your brokerage account, Charles Schwab, Fidelity, Webull, Robinhood, whatever. Then you're going to have $10,000, right? And you have 16 months or 20 months, right, to pay that loan because you're going to have 0% APR for that loan. What you should do is you should put you should obviously link it to your credit or to your banking account, your checking account, and make sure that you pay $100 every month, even if the APR is 0%. Pay $100 because if you don't pay anything, I don't know if it's just me being paranoid, but I'm scared of them to say that I missed a payment, and then they're gonna basically they're gonna penalize me. So I put $100 of automatic payment every month. And then like 12 months later, when I'm looking at paying down that credit card in full, I'm actually paying it throughout the year, but I do at least $100, right? And I could always do more payments. So you take out the $10,000 loan and you buy some stock, right? And you do cash secure puts, just like how I did with BBAI, and I was telling you could do some BBAI cash secure puts and bring in 50-some%. Well, guess what? If you take out $20,000 loan, right? $21,000, and then you can then say, I'm gonna do 30 BBAI $7 cash secure puts out to January 2027, right? $21,000 is when you put down, and then you're gonna get back like $12,000. Those $12,000 are free money now, right? And you can do monthlies with. You could do cash secure puts, on any stock that brings in a big chunk, right? Maybe 10%, 15% of the investment, and then you're gonna use that money to pay off that credit card, and you're gonna wait. You're gonna either put those shares and then do a covered call, or you're gonna get the money back. In which case, you're gonna sell more cash secure puts, and then use that money to pay off that that debt. Or you can combine, and then buy more shares until you get then to 100, 200, 300, and then you'll sell cash secure puts and covered calls expiring the next month on the third Friday of every month, so that the premiums can be juicier. And so then you take, you can do weeklies too, but I'd rather do monthlies. Some people do weeklies and they pay off that loan so fast. Some people do monthlies like myself, and then they end up paying that loan in 12 months to 14 months. But anyways, the whole point is that you're using borrowed money that you already paid an upfront fee for. You don't have to worry about paying it until a year and a half from now, and you're every month bringing in cash. And that cash you're either using to buy more shares so that you can sell more covered calls and more cash secure puts, or you're just bringing that money that you're bringing in, you're using to pay for that loan. And then by the time you get to the 12th month, you're pretty much paid off and done. And you still have all that cash, right, that you've been using back and forth. And remember, by then, the cash secure puts you sold at the beginning are still there. So those contracts are going to be like 80%, 70% down. And then you can then use the money that you have to buy back, those cash secure puts. And then you're going to have $21,000 coming in your way in addition to what you have. And that's the hack, so it's easier said than done. And I know it sounds fucking confusing, and I don't know if I explained it well, but the point is that when you do it correctly, it's fucking phenomenal. I think the one person that from the Discord and from the Bruce channel that did it, and he can tell you just how insanely easy this is. And he actually keeps metrics of he does weeklies. is John Malone. So if you know John Malone, write him and ask him to explain, because he will explain it way better than I, because he actually keeps weekly charts, right? And he's way better at explaining this shit than I am. Just because I'm giving you, like, the dumbest term, because that's how I explain it. And because to me it's easy. It's just, it sounds so simple because it is. And the downside is that, let's say, for example, the market took a crap. Well, then you're kind of, in a position where you're like, you have to really be careful. But again, this is why you don't sell cash secure puts on, stock that's 52-week high. You go at a stock that is 52-week lows, right? And I don't take out these loans during bullish times. I take out these loans when there's bearish times ahead, because I know that the stocks have already been beaten down and devalued, and so I can get the most bang for my buck, so to speak. So I don't know if I would. I don't know if I explained it well or if it makes any sense to you, but that's kind of what I kind of did. Andres de la Torre is in the house saying hi. Oh, I'm late. What is up, Andres? SOFI just hit 26 in scam hours, and that's a beautiful thing, Tom. That's a beautiful thing, and I'm here for it, man. I can't wait for tomorrow to for the market to open. Oh my God, I love it. I love seeing my portfolio is just all green, and oh my God, it's up 5% overnight right now. Oh my God, I don't know what's happening. I mean, I know what's happening, but it's just boy, oh boy, oh boy. I can't wait for tomorrow. SOFI just went back down to 25.59. AI is 17.81 right now, my friends. AI is 17.81. I think AI is going to go to like 18.50 to $19 tomorrow. You had 17.50s there. I was begging you guys to write 17.50s. I mean, I had to fight you guys to write some $15 cash secure puts. And I don't know if you guys did, but like, you'd be laughing your ass off right now. I told you guys, write some unities. Write some unity. I think it was like $30, $32, and I was like, guys, just write some 30s. Write some $30 unity cash secure puts. And on Friday, I was telling people, write some $45 unity cover calls out to January, because they're giving like $6 a share, $7 a share right now. And you could have brought in a massive amount of money in your pockets. But I don't know. CKT saying, okay, thanks for the info. I'll look into it and talk to John too. Yeah, man. So, like, the more people you talk about this, right? Especially when you're trying to, go on YouTube and look at, taking out a HELOC against my credit, see what comes up. But I mean, that's kind of the gist of it. You're taking out a loan against your credit, and you're using, that loan to buy stock that has been kind of beaten down, right? And then you go through either covered calls, you can buy it at you can buy outright that those companies, right? But I do cash secure puts. It's just better because I bring in premium right away, and then those cash secure puts, are out really far, and then the premium that I have left is so cash that I can play with right now, right then and there. Because worst case scenario, when those cash secures puts expire, is kind of when that APR, the 0% APR is expiring. So I can always go back and take all that cash back and then use whatever amount I have left and just dump it and pay it off right away so that I don't get in trouble, right? So like, that's worst case scenario. That's why I forgot to explain. That's why those cash secure puts are there so far ahead, close to where that loan is expiring. So, or at least the 0% APR is. So anyways, guys, tomorrow, the market, I think, is going to give us a nice little green. And we have to take advantage of it. RXRX is now 501. Those $5 cash secure puts, man, are juicy. Those $5 cash secure puts are juicy, and they're still there. You could go to October 2017, and you could bring in 63 to 65 cents for those cash secure puts. RXRX. $5 cash secure puts are bringing you in more than 10% to October. It's free money. It is free money. It's a good company. It's a company that when it moves, is violently going to move upwards, and people are going to be like, man, Savage, do you think it's time to get into RXRX? And I'm gonna laugh. And I'm gonna say, dude, you need to look at my past videos where I was literally begging people to do $5 cash and cure puts. But anyways, I was begging people to do $1 cash and cure puts on Open Door not too long ago. $1 cash and cure puts. I was like, bring in 15-20%, guys, for those cash and cure puts, and they would have gotten those shares put to them. That's the funny thing. And they would have been, buying the stock at like 80 cents, 75 cents. I don't know, man. I mean, you could lead a horse to water, my friends, but you cannot force him to drink it. RIVN is coming out with new cars. RIVN it's got a battery that lasts 450 miles per charge for their SUV. RIVN is a great company. They cannot build cars fast enough. People have been waiting for a RIVN for like a year, and they're still waiting, and they've happily paid whatever it is, the premium that they have to pay so that they can have that RIVN arrive at their house at some point, and there's no cars available. And it's a great car. It's not for everybody. These cars are not the cheap cars. They're not your little Mitsubishis. They're not, your $30,000, $40,000, SUVs. That's not what they are. These cars are made to go toe to toe against the BMW SUV, the Mercedes-Benz SUVs, the Lexus SUVs, and so on and so forth, right? And these cars are pretty awesome. I test drove one, and I've been inside one, and it is a beautiful car. There's so much room, and that's the number one key thing for me. I have a family. My 3 kids are growing. They grow like weeds, and they make a lot of noise. They require a lot of space. And my wife always, whenever we travel, we always bring my wife's mom, because, abuelita has to come with, and the kids love her, and we need a lot of space because, we like to travel in comfort. And then we bring, clothes and little blankies. Kids cannot travel without their blankies and their favorite plushies, right? And so we need a lot of space. These cars have a ton of space. Let me tell you, we're often going to Tahoe, to Reno. We go to we go to Santa Cruz, to the beach. We go up to like Northern California and the Oregon border. I mean, we travel quite a bit, and then we need an SUV that withstands some punishment. And these trucks are it. It's just that it's sitting at $13 a share right now. I don't know, man. This company has no business being at $13, $12 a share, but yet here we are. So when you say, "Hey, man, what company do you recommend?" That's one of them. I recommend it. It's not financial advice. It's just, if I was an investor looking to get into like an RV, electric vehicle company, and I can't afford Tesla, I don't want to buy Tesla because it's expensive, I can look at Rivian, and it's at $13 a share. Instead of buying one Tesla share, I could buy 25 of these. 25, 30 of these, and they're right here. 3 Tesla shares, gets me 100 of these, and then I can write a covered call, and I can mitigate. I mean, I just see so many. Gosh, I just, I find it fascinating how, when you have done as much research, right, and when you looked at these companies, and when you know what the upside is, and when you've been there, right, and you're conveying, and you're saying to people, "Hey, man, guys, look at these companies. You guys don't have to believe me. Do your due diligence. You look up the company," right? I was telling people, guys, Palantir is going to go to $100 a share. Some people, some haters commented and laughed at me, like, Do you have any idea of what you're talking about? Blah, 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 blah. And I was like, I do. I do. I know what I'm talking about. I know I've seen what this company can do. C3.AI is going to $100 a share. It is. It's at $17 right now, my friends. You know, C3.AI is sitting there just waiting for you to pluck it. SMCI was just 20 bucks a share. It's now 44. I was telling people it's going to 35, 40. Sell some $45 cover calls. You know, it went up too fast. I sold some $50 cover calls and some 45s, and I brought in $18 a share. $18 cover calls, $16 cover calls. Brought it in, put that money in the bank, you know, used it for everyday expenses, and then bought more shares of all types of companies, right? Roblox. I was telling people to buy Roblox. Jesus, 3 years ago, Roblox was 20 bucks. It was like 25 bucks. And I was like, guys, Roblox is a really good company. On the Uncle Bruce show, I was like, guys, Roblox is, you know, and then Uncle Bruce was like, no, you know, this is one of those things that, you know, it's a fad. You know, kids don't have that much purchasing power, blah, 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 blah. Here is Roblox now, $119 a share. You know, even Uncle Bruce laughed when I said that C3.AI, you know, and Palantir were good companies. He's like, there's too many shares. They're not making money. They're all in debt, blah, 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 blah. And here we are. You know, like, I mean, look, everyone has their opinion. That's totally fine. You know, it just so happens that, you know, I pick winners. I fucking pick winners. And then I mean, you don't have to believe me. Look at the videos. Now, it's not to say that I haven't shit the bed. I picked 2 or 3 bad stocks, right? But when you pick 50 good stocks and 3 bad stocks, that is not a bad record. That is not a bad record at all. You know, and so like I wish just, you know, people do that. Like I said, do their own due diligence, right? This is not financial advice. I'm not forcing you to buy anything, right? And in the interest of full disclosure, every company that I'm talking about, I do invest in, of course, right? So you could say biased, but am I, or am I just giving you all this information so that you can then go and do your own, you know, background check? You can do your own research and be like, you know what, that guy's onto something. Let me look at this other thing, right? And then you can just then take a position and make some money, right? Like I don't have any commercials. You know, so like I could easily click that I want to have commercials and ads on my page, and you guys every 5 minutes will see a commercial when I'm live. But like I don't want to do that because it's like, for what? Like I honestly just want people to make money because we are all getting a raw deal with the way that things are working now and the way that the system is rigged, you know, for like the billionaires and these tax cuts, you know, we're paying for those. You know, the billionaires are laughing at us right now. We're fighting for scraps. And I just so happen to believe that, you know, when we stick together in a cohesive unit and people do what's right for the people, you know, and then you do right by other people, good things happen. I'm of that frame of thought, you know. What do we got here? Do this in the house saying tickers in the title. I love it. That's right. JJ's in the house saying hi-oh, and he's playing golf. I wish I was playing golf. Andres de la Torre saying, my 65 SOFI November 25 covered calls at 27 are in danger. I'm thinking of buying back. What you think? I think it is a silly move because you have so much time before November. So much time before November. I have $15 covered calls expiring 2026, and I'm not moving yet. So if I'm at 15 and you're at 25 and you're shaking in your boots, dude, I got a bridge to sell you in New York City, man. Matter of fact, down the street in San Francisco, there's this red bridge I'd like to sell you. You have so much time, my friend. I'm just fucking with you, but at this point, it's just there's so much time between now and November, right? So just chill. You know, at 27, so you have $27 covered calls. The ticker's at $25, man. Don't worry about it. Just wait. Wait, wait, and let that data decay, right? Um, Late October, early November, then you can kind of think about a couple of moves here and there. But by then, that time premium has decayed to like nothing, and then you'll be able to have more options because you can always roll. Remember, you can always roll to 2027, dude. Like, what is the problem if let's say you're at $28 on that day in November, right? Let's just say that. Fucking move to 35, 2027, and bring in some premium. Fold your arms. Bring in some premium. You will be able to because the data is going to be this long or this short, right? Um, for when those covered calls expire, and then you're going to be able to use time as your weapon. So you're going to say, okay, fine, let's go to 2027 January, and you're going to go from like 27. You can go to 30. If you can go to 35, go to 35. I think 2028 is going to be open by then, right? You can make a decision. You go to 2028. I mean, that's a long time, but you can go to 2028 and do 35s. Bring in even more premium and laugh your ass off because you have 65 contracts. If you bring in like $1 per contract, even though you're moving up a couple of strike zones on the chain, that's $6,500. So some idiot's paying you $6,500 so that you can sell SOFI at $35 in the future. That's insane. Take that bet. I wouldn't worry about it right now, dude. I don't worry about it. Dude is saying, give Savage a thumbs up. Thank you, dude. I appreciate it. That's a Thorson. Thank you, sir. Now you're welcome, brother. I just, that's what we're here for, right? Like, you are definitely emotionally invested in this because, obviously, right? And I'm able to see it from the outside perspective. So, like, I have no skin in your game, and so I'm able to see it from like a neutral perspective. And then because I'm also vested in the game, and I'm $15 covered calls that I'm underwater, right? So, like, experience, right? So, there's so much time between now and November, my friend. Cross your arms, and I know sometimes that's the hardest thing to do. But what's gonna fucking suck is, let's say for whatever reasons you decide to just not listen, and you end up buying them back because you fucking went nervous and you paid, say, $12,000, right, to buy them back. And then a week later, the market tanks for whatever reasons, and then SoFi goes to $20, and those covered calls, I mean, you're gonna feel like shit. You're gonna be like, I just lost $12,000, and all you had to do was this. That's all you had to do, my friend. And sometimes that's the hardest thing to do, but I've been there. I mean, I've been there. I don't blame you. I'm not blaming you at all, in the least, at all. Anyhow, let's see here. Sentinel 1. You guys know I like my Sentinel 1. It's up 1.7% overnight. I've been telling you guys this was at 15 something. This was at $16, and I was telling you guys, buy this stock. You can buy this stock right now. It's pretty cheap because, like I tell you guys, this is the next CrowdStrike. Okay, go ahead and Google CrowdStrike. See where it's trading at. These guys do the same thing, except they have not gotten hacked. They actually are a lot more proficient than CrowdStrike. But CrowdStrike is a name now, right? They've been able to like kind of get their tentacles all over the place at this point. That companies have contracts with them. But I assure you, there's one or two companies out there that have contracts with CrowdStrike that can't wait for those to expire so that they can hire Sentinel-1. I can guarantee you that. And here it is at 1725. This little tiny company called Sentinel-1 that has, let's see here, only 2,800 employees, right? And it's headquartered here in Mountain View, California. There's a lot of Stanford people there, and these guys are using AI, and so does Sentinel-1. Sentinel-1 is actually using a ridiculous amount of AI now and mitigating a lot of costs that route. They're going to make a lot of money, guys, and this stock is not going to be here for long. I'm telling you. RIOT Platforms. RIOT Platforms was trading at, I think, $11, $10.50, something like that, a couple of weeks ago, and I was telling people, sell some $10 cash your puts, guys, for October, out to October. Bring in, I think, 10, 15, $1, $1.50, $1.75, something like that. I was like, bring it in. Just get it. Just take that money. It's free money. Well, it's now $12.80, and it's down 3.18% for the overnight trading hours. If tomorrow goes down 5 to 10%, it's I say if you wrote $12 cash secure puts out to October 17, that would not be a terrible thing, and you could bring in, say, put a stink bid there of 1.25. Bring in $1.25 a share. Put it out there. $1.25 a share, just for shits and giggles, right? You could go to $11 a share and put a stinker of 1.1. Put $1.10 a share, 10% to go to October. Stinker. That's what I do sometimes when I see that overnight things are down, and I know that tomorrow there may be an overreaction. I see that it's quite a ways from that strike, but I'll set the stinker anyways. And guess what? I'll get an alert saying your contract for cash secure put on RIOT, blah blah blah, has been filled at $10, $1, $12, $2, $3, whatever. And if somebody got desperate somewhere and I made money, I mean, that's just the way that it goes. The stock market is a device where patient people make money and impatient people transfer their wealth over to the patient people. That's not my saying. That's Warren Buffett saying it. You don't have to believe me, but you can talk to the Oracle of Omaha and he'll let you know. Let's see here. Open Technologies, I already told you guys, the $4 cash secure put, not a bad deal. BBAI is sitting at $5.50. Gosh, it's so cheap right now. It's so cheap, and they're gonna start taking a ridiculous amounts of loans to just to put back into the business. It's just man, I wish I had so much more money. I see Smart Rent is here. WULF Technologies, man. TerraWulf is here at $9.20. TerraWulf was just at $7, and I was telling people do the actually it was at $6. And I was telling people do the $5 cash secure put for October, and I think it was paying like $1 something, and I was like, you're bringing in almost 20% to go to October for maybe buying this stock at $5. It's now at $9. And it's just gonna keep. I mean, they signed a contract with NVIDIA, guys. They signed a contract with NVIDIA. They're gonna have money coming in. So patience is key, guys. Go to October 17th, sell a cash secure put. TerraWulf, $9 cash secure put for $1.12. You could do that tomorrow morning at open, or you can see what the market gives you. Let's give it some time to kind of settle. Place your stink bids, place your bets, my friends, and see what it gives you. CKT is saying patience is the biggest thing I need to work on. I need to take page out of Mr. Cotto's book. Indeed, you do. That guy has the page. He has Zen-like, Buddha-like patience, bro. And I aspire to be like fucking premium of the option. That guy has so much patience, and it just, I mean, he often buys back contracts at 1 cent. That's crazy. When you sell a contract for $8 and buy it back at a penny, that's almost insulting to the person that bought that covered call or the put. But I think we might as well rescue something, right? So it's just like, I don't know, man. That guy, he's the shit. Andres de la Torre saying Oscar Health has been interesting options as well. Okay, there you go. Yeah, absolutely. I haven't looked into it, but you know, I'm sure that you have your reasons, and it's making you money. And as long as you're making money, that's what matters, my friend. Dude is saying patience is a lesson you learn with time. Don't beat yourself up. Indeed, don't beat yourself up, but definitely learn from your mistakes. You know, you don't want to keep making the same mistake over and over and over again. And you don't want to be making the same mistakes you were making 3 years ago now, because then that's just not learning anything, right? So uh, let's see here. What else do we have? I mean, man, Ethereum is $4,700. I was waiting for it to go to 3,900, and it didn't go to 3,900 on Friday. I think it went to like 4,000 something, and I should have gone in, but you know what? It is what it is. Bullish is down a few dollars. I bought back a $65 bullish cash secure put that I got, I think, $11 for, and I sold it back for like 10, 20. I made like $80 or like $100, and then recovered back on me. And in hindsight, I should have held, but I was trying to raise cash for this Jackson Hole meeting, and I was wrong about it, but I'm happily wrong, because now I just see I see all the upside, and it's just like I can't wait for tomorrow. Let's see, RCAT is green, MOLN is green, Archer Therapeutics is gonna tear. Oh my god. FFAI is up. Faraday Future Intelligent Electric is up 12%. Oh wow! After hours up almost 1%. So let's see what it's got tomorrow. I got like 10 cash secure puts, 250 cash secure puts on this puppy, which I got 55 cents for on average. So I'm getting over 20%. So yeah, I can't wait to see what happens, man. I'm just there. QQQs seem to be a little down right now, and I'm wondering why. NVTS, Navita Semiconductor is up a little bit, and I'm very excited to see what it's going to do tomorrow, because I see Navita's going back up to $8 a share. I have $6 cash secure puts, $7 cash secure puts, and $8 cash secure puts on it, expiring in September and October, all of them. And so, you know what? I can't wait to get those shares put into my account, because, again, they have signed contracts with NVIDIA, and it's just a matter of time. QUBT, quantum computing, is up a lot and ripping. I have $15 cash secure puts that are in $16 cash secure puts, and those are beautiful right now. I can't wait. International Tower Hill Mines, THM, is also green. Brigetti Computer is green. I have some $15 cash secure puts that I wrote in the money on purpose, and those are going to be beautiful tomorrow. Stock is $14.93. Super Microcomputer is green right now, barely. IonQ is my baby. I got it when it was 15. It's now 40.10, and I'm beautifully underwater, and I don't mind. Take them. Serve Robotics is up at $9.78 a share. Ever so green. I have 10, 10, $9.50, and $11 cash secure puts expiring in September, October, and January 2026 on this puppy. So yeah, man, I'm very excited to see what this does. Let's see here. Who else do we have? SOUN. We got our Sound Hound, and I have some $12 cash, some $11 and $12 cash secure puts expiring in October and January, and I just can't wait for them to expire worthless at some point. Just holding. Thinking about. Let's see here. Did we take a bite out of Bit by Bit? BTBT is Bit Digital. It's barely trading green right now. Let's see what happens tomorrow. Domo. Domo Incorporated designs, develops, and markets executive management software solutions. It offers customized software tools for business operations, customer relationships management, human resources, and financial services. Yes, right now, I'm waiting to see some more from Domo. It's trading kind of halfway between the 52-week high, 52-week low. If it gets down to 12, I'm probably going to think about writing some $12 cash secure puts. And let's just see what the market brings us. SOXL is slightly down. Figma is down a little bit. If Figma gets down to $70, $65 a share, probably going to go with a cash secure put and try to take a bite out of it. Then Webull is barely up right now. I have $12.50 and $15 cash secure puts that expire October and January. So I'm just waiting to see what happens then, man, because they have earnings coming up, and I think they're going to do well. I may take some of the profit that I made with those cash secure puts and just buy Webull on any pullback to like 14. I may just go at market price and wait the day of earnings, and maybe I'll sell some covered calls. So if I buy at 14, I'm going to sell some 17s and try to bring in like $1 or something, just in case it rips. I buy at 14, I'm selling at 17 and making $1 premium, essentially selling at 18. So I'm making $400 on my investment, right? $14 investment, making $400. What's wrong with that? You tell me what is wrong with that. Anyhow, guys, I think I'm gonna probably hit the road. It's 6:15 here. We've been on the air for almost an hour and 20 minutes. I know you guys. I appreciate you guys watching me, and you guys are excited for the market tomorrow. Like I said, NVIDIA has earnings, so let's see what NVIDIA brings, because NVIDIA moves the market, right? GME has earnings. Let's see what GME does. Let's see how the stock moves. I'm waiting for some really good news and for the stock to move anywhere from 25 to 30. On any of those movements, I'm selling some covered calls out to January and bringing in some chunk of change, because at this point, I'm looking to get taken out. And then once I have all the cash, I can go back to cash secure puts and just do cash secure puts. I'm trying to get rid of a ridiculous amount of shares at this point. I want to be heavy on cash, and then just have my cash make cash. And then worst case scenario, I get put shares of companies that I want, right? But it's just we are kind of on uncharted waters, so to speak. So I just want to hold as much cash as possible, and let's see what the market brings us, right? Let's see what it brings us, and let's not be afraid of ridiculously red days. And let's not get caught flat-footed and be afraid of the upside either. If the market rips, we sell some covered calls and bring in cash. That's what we do, guys. We're option sellers, man. We are options traders. And that's how we make our bread. Let everybody else, go to the casino and pay for casinos. We are the casino. Let's keep to that. Anyhow, guys, thank you for watching. Andres de la Torre, CKT, Duke, JJ, Tom, Ricardo Canales, Tom Kaufman, Jude K, Moneymaker Juan, Kent's mom. I can't say enough. Man, you guys rock. Have a great night, and enjoy your dinner wherever you are. Go to bed. Set your alarm clocks for 6:30 a.m. tomorrow. That is what, like 11 and a half hours from now. That's when the bells ring and we begin trading, guys, and making money. All right, so have a great night, guys. I'll see you guys tomorrow, 8:30 a.m. I'll be here. We'll talk shop. We'll see what moves we made and what we're working on. Until then, I'm the Great Savage. Thank you so much for watching, guys. It's Savage of Wall Street. It is. See you guys tomorrow. Have a great night. You scallywags and ne'er-do-wells. Until then, bye.